Hello, everyone, and welcome back to another episode. My name is Jordan. I'm a millennial investor. If you have not seen me before, my goal is to get to $1 million by the age of 40, and this is my goals by getting there. And how I plan on getting there is by trading options, by selling covered calls, selling cash secured puts, and owning fantastic businesses such as the one that is the main subject in today's video, which is iRobot Corporation. I currently own 200 shares of the company right at about my cost basis where the company is trading at now at about $66.80, and I currently have about $13,000 worth of this company, and I'm going to go over in this video all the reasons why I believe it is a fantastic business. It's going to be very accretive for shareholders for the long term, the moves that they're making financially now, and how it's setting them up for positive numbers in the future due to my expectations. We're going to talk about revenue growth, we're going to talk about profit margins, we're going to talk about all that good stuff, and then last but not least, we're also going to talk about valuations. So if you're interested in investing in iRobot Corporation, or you're currently a shareholder in this business, well, stay tuned because we're going to go over a lot of the main highlights for the business and why I think it's going to be a great investment long term. If you haven't got signed up down below, I always mention this in all of my videos, it's a free $50. If you're watching this video, it doesn't matter if you have a broker already or not. Why would you not a free $50 bill? Just click this link, which is down below in the description. We've had 124 people sign up so far. It's free to use. There's no fees whatsoever, and they're what we're going to be using in today's video on this free platform, which is absolutely fantastic. So $50 right there. Go ahead and get signed up, and let's jump straight into it. Like I said, I own 200 shares at an average price of $69.63, so about 70 bucks, and it currently trades at $66.80 as of Friday's close. Now, this is a company that I'm very bullish on for the long term, and I'll be going over some of the valuation metrics in just a moment, why I think it's going to be great going into the next 1 to 2 years. Now, first off, let's talk about the share price and how this company is done. It is done very poorly like most growth stocks. Over the last 3 months, it's down 18%. Over the last 8 months, it's down about 23%. Over the last year, it is down about 23%. Over the last 2 years, that's when it is finally starting to get up about 30%. And then over the last 5 years, it's just slightly up at 18%. And this is interesting to see a company that is barely up in the last 5 years, while it has seen continual long-term revenue growth and consistent earnings per share growth with just 1 or 2 years of hiccup due to some of the supply chain, semiconductor, and all these other labor shortage issues that companies like this are facing right now. Now, if we look at the long-term projections, whether or not these will turn out to be accurate, well, that's to be told. We'll see that in the future. But this is what the company projects as of its 2024 estimates. It projects 2.4 to 2.6 billion in revenue based off of some of the analyst projections that fits in line for where the company's about expected to grow, maybe a little bit bullish than what the average analyst is expecting. The profit margins are about relevantly close. The operating profit margin a little bit higher than normal, and then the earnings per share is the big boost up because analysts are projecting that in the year before in 2023, they're only projected to do 4.55, and I'm going to give a quick estimate for why I think that this number is less than what it's actually projected to consistently do moving forward. Now let's talk about what this company's doing to innovate and get ahead of the game and where they're looking at going into the future. Now they're not just selling their traditional old iRobot, old school Roombas like they were before. Obviously that's the main core of their business, that's their flagship product, but right here iRobot acquires Aris Cleantech AG, adding premium air purifiers to its product lineup. Now if you want to just quickly glance over this, you can pause the screen if you want to read over it, but basically what Aris Cleantech is that they sell very high-end air purification products. This is the slide that I was talking about, slide 51. This is in their most recent investor presentation. So if you want to look into the company, you can get more details on it. But this is going to be an accretive acquisition. How do I think this is going to be an accretive acquisition? Well, based off of this report that they had when they initially acquired the company, it says, quote, "Although iRobot anticipates that the Aris business will be modestly dilutive meaning bad, it's a negative earnings outcome to shareholders, to iRobot's full year 2022 earnings, the company expects that accelerated revenue growth during the second half of 2022 will deliver improved operating profitability and that this transaction will be accretive, meaning positive to shareholders, to the company's full year 2023 earnings." Basically, to break this down, the quick rundown is, hey, we're going to acquire this business. It's going to take lots of costs to get it up and running. In 2022, it's going to be a negative. But for 2023 and beyond, this is going to be a positive, accretive acquisition for shareholders as it will bring more revenue growth and more profitability, which the second one, the profitability, is the big one that you're looking for as a shareholder. Now, I've talked many times in the past before. If you want to see that, check out my previous videos. But I also think that their transition to a subscription revenue service, subscription revenue is the most sought out revenue streams that in the world. If you look at pretty much any company on planet Earth, including Taco Bell now, they're offering a subscription. Subscription is the absolute way of the future. It's the way that companies can get consistent, sticky revenue, and I think it's great that iRobot is finally transitioning into this. For someone that doesn't want to commit $500, $1,000, or whatever it is for a new Roomba on their high-end Roombas, they can now just do that for $29 a month for their subscription service, and some of them even being done at zero activation fees, like you can see right here. So that's a compelling customer value argument for someone that's wanting to buy a Roomba. Now, the one thing I wanted to talk about here, I wanted to just give some quick bullet points and look at the company's past and how it may reflect into the future. Now, first off, this company has had a long-term track record of growing revenue, its top-line revenue consistently, and this is both before the acquisition that iRobot just announced. In 2014, this goes for the last 6 or 7 years, going back to 2014, this company did $556 million in revenue, bumped up to $616 million, up to $660 million, up to $883 million, up to $1.09 billion, up to $1.21 billion, up to $1.43 billion, and then this year they're projected to finish out with about $1.57 billion, which is an increase from last year's $1.43. Now, if you look at the profitability, this is the one hiccup that this company has had over the next year or so. They have steadily increased it long term. They did produce $147 million worth of earnings per share, which is the equivalent to a little over $5, but that is nowhere near what this company is going to do in 2021, and not even what they're going to do in 2022, and frankly, finally starting to catch back up in 2023. So the company has been able to grow its business, its overall market share, and its customers that is adding to its business, but the overall profitability has hit some major roadblocks in the last year or so, and that is due to COVID restrictions, that is due to labor shortages, that is due to the semiconductor shortages, that is due to all these different shipping costs and inflation costs and all these things that many of these businesses such as iRobot is currently facing. But this leads me to the long-term projections of the company, because right now the share price has been punished due to that profitability. Looking at the last year chart, like I said, ever since this big spike up right here of about $200+ a share, this company has went down and down and down and down, and it is right now trading in the $66 a share range. And looking at the 5-year chart, you can see this is literally some of the prices you were seeing back in, what is this, April of 2017. So looking at that, you literally almost have 5 years worth of full growth priced into this company, all being just eliminated in the matter of a couple months, right? Especially over the last year. But looking at the revenue growth, right? So looking at the revenue for the year of 2022, this company is projected to finish out the fiscal year 2022 of $1.79 billion, okay? If we take the hypercharts here and we look at profit margin over the long term, and this is an annual basis, this is 2014 all the way to the most recent full year reported 2020, you can see that their profit margins are steadily and slowly improving over time. So not only are they growing their top line revenues, but each dollar revenue is becoming more profitable over time, because in 2014 it was 6%, and then as of the most recent it was 10%. But let's just use a baseline as of the last 2 years before that, 7 and 8%. Let's just be really conservative, and let's say that in 2023 they can get back to this 8% number, okay? Now, we see that they projected $1.79 billion in revenue in 2022. So that's this year. But we're going to skip this year, because right now, this year, there's a lot of uncertainties, like we said, with those shipping costs and all those other inflationary issues that are going on. But in 2022, that will be in the background. Like we also mentioned earlier, we said how 2022 is going to be diluted for shareholders from this acquisition, which is also, once again, going to hurt profitability. But in 2023, this is going to be a big ramp up. So let's go ahead and focus on next year's numbers, because that's what I'm holding this company for. I don't really care all that much what they do this year. I hope they can put up some profit numbers, but if not, it's not a big deal, because I am mostly focusing on the 2023 numbers. They're projecting $2.06 billion. Let's use a conservative estimate slightly below that. Let's just say that they only do $2 billion. So $2 billion times the profit margin of where I think they can get back to. I think they will long term, maybe even in 2023, get past this number. I will not be surprised if they put up a 9 or a 10% number, but we're going to use the conservative 8% and slightly below the analyst projections for revenue. That's $160 million. Right now, the company has shares outstanding of 27 million. So you take 160 million and you divide that by 27 million, right? 1, 2, 3, 4, 5, 6. And then that gets you an earnings per share number of a little under $6 of earnings per share, okay? Now, what I'm going to do is I'm going to be even more conservative, and I'm just going to say that let's say they only do $5.50. Once again, these are conservative numbers. And now this leads me to the same question, just with the video I made the other day, like with Corsair Gaming. I ask you, what does a company like iRobot deserve to be valued at? In my opinion, a company that's consistently growing its revenue year over year, double digits, I think that this is a business that, in my opinion, since they have leading market share, they have pretty decent profit margins, I think that, in my opinion, it deserves about a 20 trailing 12-month PE. So you take this number, 5.5 times 20. Now, that gives this share price in 2023, about a year and a half from now, at 110. Now, 110 is significantly higher than today's current trading price at 66.80. Based off of where we're at today, if you take 110 divided by 66.80, that is a 64.67% upwards move. Now, you can run these own numbers yourself. You can say, what profit margin do I think they're going to be at? Do I think they're going to be at a lower valuation? Do I think they're going to be at a higher valuation? Do I think that they only deserve to trade at a 15 forward P? Do I think they deserve to trade at a 30 PE? These are the questions you can ask yourself and decide as an investor if this is worth the risk reward for you. But long term, I think that this company is going to be great. I think their projections are going to be somewhat, maybe a little bit bullish, but overall they're trending in the right direction. The profit, the revenue is going great. The acquisitions are coming in strong. And I think as they can transition to a more efficient model, a subscription recurring revenue business, I think just all bodes well for this company. And I honestly think this 2023 number of $4.55, I think they're just going to blow that out of the water. If my more reasonable, more bullish estimates, I would not be surprised whatsoever if they did a $6 earnings per share number, if not more than that. I think in the absolute best case scenario, they might even see, I don't know, maybe even a $7 earnings per share number. But either way, if they even do a super conservative estimate, like I said, this company deserves to trade, and in my opinion, at least a 20 forward PE. So even if this company did far below what I estimated and what the analysts did, and they only came up with $4, I think that this still gives this company an undervalued metric in my opinion. But either way, guys, I'm going to be investing in this company for the long term. That's why it's my second largest position in my portfolio, and you will likely see me own this company pretty much all of 2022. If you didn't do so in the beginning of the video, get signed up with M1 Finance, still having that $50 promotion for getting signed up. B1 number 125 to do so, get the free $50. And other than that, guys, thank you so much for watching. I appreciate you watching all the way to the end. My name is Jordan. I'm a millennial investor, and this is how I'm looking at investing going into 2022. But thank you guys so much for watching, and I'll catch you guys next time.